After so many years in the market, I can confidently say that this is the only strategy that I will ever use. It gets repeated every single day in the market, and it is so simple that even a complete beginner could use it. So make sure to stick till the end of the video to understand it completely, and let's get into it. But the first thing, of course, I gotta show you the profits that I got using this model, because I don't want to be teaching you something that I don't personally use. So you can see right here profits that I actually accumulated over like 5 to 6 months. So you can see I made over $100,000 in profits, and you can see the win rate of the strategy is above 80%. And you can see how consistent it is and how the equity is just growing over time. So now let's just get into it. So what we will be using today is going to be this model, and when I show you this picture you may get scared. So this may look really complicated with all the letters and with all the phases of the market, but trust me when I explain it to you, it is going to be so simple and easy to understand. And as I told you, the complete beginner can do this in the market. So the goals of the video are going to be to learn to apply my strategy, are going to be to learn to use it every single day, because I told you it's dumb, simple and proven, and it is of course going to be to reach the level of profitability and consistency so you can finally start making profits in the market. So let's just take it step by step. So the first thing that we want to learn of is the letter S, which stands for structure. So what structure is in the market? It is just us pushing to the upside or us pushing to the downside. So it's really not complicated. It is just spotting that the market is at the moment making a move to the upside or just making a bigger move to the downside. So that is just going to get us to actually determine, alright, market is headed to the upside or to the downside. So you don't need to overcomplicate this step, because it is going to be pretty easy. When you come to the charts, you're just gonna realize, alright, market is either pushing up or pushing down. So when we know that S stands for structure, then we are going to go to C, which stands for correction. So of course market is always moving efficiently, so when we make a push like this in the market, we want to make some kind of corrections to of course rebalance the buyers and sellers, because of course you see in the markets and you know that markets do not just pump all day like this or dump all day like this. We always, after some kind of pump or structure being made in the market, we want to see some kind of correction happening in the market, which is going to rebalance buyers and sellers and just make market move efficiently, which of course we are going to see every single day. So after we make structure and correction, the move that we can next expect is pretty clear. It is going to be another structure, because after the market is going to do structures and corrections, of course it is just going to push that direction. But the next step that I'm going to learn you is going to be crucial, that we understand why is it happening and how we are going to benefit from it. So now that we know that market is going to be filled with structures and corrections after that, and of course structures again, where we are just kind of getting that uptrend or downtrend if we are pushing towards the downside and making structure to the downside, and small corrections towards the upside, then we are in a downtrend. So now this is pretty important. So when we have in the market structures and corrections, what we want to see and what we want to mark out is the low of the correction. So that will look something like this. And why do we want to mark out the low of the correction? Because all the people of course can see that market is making structure to the upside, and when it's making a pullback towards the downside, what are all the people and traders, retail traders, gonna do when they see that market retested some zone or started pushing towards the upside? They will make their entry in the market somewhere right here. And of course, where do they put their stop loss? They put it underneath the low. And what low do we have in the market? It is a low of the correction leg. So it's really easy to spot, because it's going to be structure, correction, structure. So this low is going to be pretty easy to spot on the chart. And then comes the most crucial part, which is the letter M. And M stands for manipulation. So after structure, correction and structure, as I told you, on the corrections low, there's going to be a lot, and I mean a lot of stop losses. Of course, it is like millions and millions and millions of dollars of traders who put their stop losses down on this low. So manipulation is going to be done by huge banks, institutions, floor traders, the people that are actually trading with millions and billions of dollars to their name, and they can actually influence and move the market. So that is something that we can't. But what we can do is we can wait for them to move the market and then hop in with them. So this is going to be crucial. When we get a uptrend like this to the upside, we want to see some kind of low or correction get manipulated in the market by this move towards the downside. Because what happens when the market does this, all of the traders that enter the market right here on the new structure that was happening to the upside, they put their stop losses on the corrections low. And of course, when the market does a manipulation leg towards the downside, all of them right here get stopped out of the market and they lose money, which means for all the banks, institutions, that they will be able to make money and to extract money out of the market. So when they manipulate the market like this, make everybody lose money right here, because of course in the end 99% of retail traders are going to lose money because they are not aware that there is manipulations in the market. After they get manipulated, what will happen is of course the true move, which is structured towards the upside. But something crucial that we want to spot in the market is something called a fair value gap or an imbalance. So what an imbalance is, or a fair value gap in the market, it is a 3 candle formation when the middle candle has too much displacement and volume inside of it that it creates this kind of gap in the market. So you can see how right here from this candle to this candle we have a hole in the market, and what that means that at this moment there was a lot of sellers in the market and they managed to make a imbalance in the market, which of course what market does with imbalances, it likes to retest them. So what all the people expect is for us to respect the imbalance, to come back inside of it, to fill the imbalance, and of course to continue moving towards the downside. But that is not going to be the case, because all the people look at fair value gaps as something that is going to push the market away, but we are going to wait for a specific pattern where we actually disrespect the fair value gap with a candle that is going to look like this. So when we get a body, so this is the body of the candle right here, when we get a body closure above the fair value gap, so it needs to be a closure, not just a breakout of a fair value gap, but a closure of the candle that confirms the disrespect of the fair value gap, then what we want to see is a move to the upside, of course targeting some kind of highs in the market, because at highs and lows are going to be stop losses. So now let's get into details on how are we going to view the structure, correction and entry. So we will mark out structure on a 15-minute time frame. So on a 15-minute time frame on the chart, we are going to open it and we are going to spot where the market is pushing at the moment. Then the correction is going to be marked out on the same time frame as the structure, so it's going to be marked out on the 50-minute time frame, where we are going to spot the obvious low in the market where we are making structure to one side. And of course that low is crucial because at the bottom of it is a lot of liquidity, which stands for stop losses and orders in the market, which just means that this low right here is going to be filled with stop losses and it is going to be really likely to get swept, because of course, as I told you, banks, institutions and market makers, they want to actually extract money out of the market, so they want to make the moves that they are doing unpredictable for other people in the market. But when they make the move that is unpredictable, that is when we are going to hop in the market on a disrespect of the fair value gap. So if it doesn't make sense, don't worry, I will explain everything once again. But right now it's important that you understand, once we mark out everything, the correction, the structure, everything, we will wait for the manipulation on the 5-minute time frame. So this fair value gap right here and this disrespect of the fair value gap, we want to see that on the 5-minute time frame. And why on the lower time frame? Because on the lower time frame we are going to be able to get more refined entry and just get a bigger risk to reward to the upside. So just to remember everything once again, we want to see a structure in the market followed by a correction and another structure, so a clear trend in the market. Then we want to mark out the correction slow and we want to get it manipulated. After we get that manipulation right here, we are going to scale down to the 5-minute time frame, look for a imbalance or a fair value gap, which is going to be this hole. We want to see it get disrespected on the 5-minute, and then we want to enter the trade right here, put our stop loss below and target towards the upside. And that is the whole strategy. So we broke down all the weird letters and everything. So right now let's just get to the real chart so I can show you how this works and how you can spot it in the real market. So if you take a little look at the market right now, we can start spotting the things that I just told you. So the first example is going to be, if we look to the market, we want to see some kind of pushes to one side. So for example, from here, you can see that the market is placed all the way up to here. So that is going to be our structure leg that I told you about. Then after that, what is followed is a correction leg. And then of course, as I told you, after the correction, we just want to see another structure, which is of course this push to the upside again. And then when we've seen in the market that we have a structure, after that a correction and another structure, all that we are expecting is a move that is going to sweep out the low of the structure. So if we right now take a tool and mark out the low of the structure, now we want to get it swept. And one more thing that we can look for sometimes in the market, which is going to be a nice confluence, as I told you, imbalances and fair value gaps like to get retested. So they like to get retested and they are likely to push the price away. That is why we are entering on the disrespect of it, because if it gets disrespected, it's very logical that the price will likely to go that direction, because after we disrespect it to the upside, it is very likely that we go to the upside. So if you spot a fair value gap right here, it is just underneath our correction slow, so we may get a manipulation and also we may tap into it and then bounce back to the upside, which is of course really likely to happen because they like to get retested. So right now what do? We scale down to the 5-minute time frame and we are going to wait for, of course, the manipulation. So if I fast forward the market, let's see what happens. So there it is, there is our manipulation and there is our tap in to this 15-minute fair value gap perfectly. So right now what do we want to see in the market? We want to see a disrespect of the last fair value gap. So you can see right here, if I take my tool, you can see that right here from this wick, we have a hole towards this wick. So if I push this to the right, you can see this is our fair value gap. A body is a little weird, but don't worry, they just bug on the chart. But what's important for us is that from this wick to this week we have an imbalance. So all that we are waiting for is for a disrespect of the imbalance, and this is it perfectly. So on the closure of this candle, so we do not care if it just crossed like this and it's going up and down, we want to see a closure, then and only then we are going to enter the market. So what we do is we enter the position towards the upside, we put our stop loss underneath the fair value gap, but we do not want to put it too tight. I like to put it under the body of the candle, and then we target towards the upside. For example, we can target the top of the structure because market is likely to break structure to the upside again. So let's see, for example, what is going to happen in this position. So if I fast forward the market, you can see that in the end, in a short period of time, we ended up just smashing the take profit and 3.3 risk to reward. I just want to give you an example on a $100,000 funded account. This would be $3,300. So just imagine how huge can this be when you are doing it on the real live chart. So one more free before I end the video. I want to give something to you for free. Before I do that, if you like the video, make sure to subscribe and also like the video, of course, and comment some questions if you have them. And the free thing that I'm going to give you is a 10-page playbook, of course, in a PDF that is just going to help you execute this strategy in the lifetime so you can keep it by your side. And one more thing is, at the moment I do run my one-on-one mentorship, so maybe if you think that that is something for you to get mentored by me one-on-one, make sure to check out the link in the description to see if there is still some spots available. And with all of that being said, I hope that you liked the video and that you learned something new, and I'm gonna see you in the next one. Peace.